Both have 8 horizontal legs. In total, those two wells access over 19 kilometers of open hole reservoir access. So it's an amazing application of technology, and we're very excited about our early results and the program going forward.
Hello, you're watching Proactive. I'm joined by Corey Rattan, CEO of Alvopetro Energy. Corey, very good to speak with you. Alvopetro has just reported a big jump in second quarter profit. What were the key drivers behind the performance, particularly in Brazil and Western Canada?
Yeah, no, thank you. Yeah, we had a nice quarter. Our production averaged 2,436 barrels of oil equivalent per day. It was pretty consistent with the prior quarter, Q1, but it was up 50% when you compare it to the second quarter last year. And it was the first quarter that it included production from our new Western Canadian operations. That averaged about 138 barrels of oil per day. And that helped generate funds flow from operations totaling $10.4 million US in the quarter. So that was up 12% quarter over quarter and up 31% when you compare it to the second quarter of last year.
Corey, how do you see these new Western Canada assets fitting into your long-term growth strategy?
Yeah, we think it's a really nice complement to our more disciplined capital allocation approach, where we're looking to basically reinvest about half of our cash flows in organic growth. So to have this to complement our high rate of return opportunities in Brazil is quite nice. We announced this farm in on February 5th of this year. It was a farm into the Mannville Stack heavy oil trend. We're on the Western Saskatchewan side of the play. The initial two earning wells that we drilled earlier this year are certainly exceeding expectations, and we just finished drilling two more wells. And the nice thing about this play is we're using some new drilling technology called open hole multilateral technology. These last two wells that we drilled both have 8 horizontal legs. In total, those two wells access over 19 kilometers of open hole reservoir access. So it's an amazing application of technology, and we're very excited about our early results and the program going forward.
Gas prices have softened slightly under your long-term Brazilian contract. How are you managing pricing volatility and maintaining strong operating netbacks?
Yeah, so slightly, I would say we have a lot less commodity price volatility than what many of our peers would have. With the way our contract works is it's priced based off of U.S. Henry Hub natural gas prices and Brent oil equivalent. So there has been some volatility there, but I would say our prices actually remain remarkably stable. We've been over $10 US per MCF. So I think that's 3 or 4 times better than what US players would be, and probably approaching 10 times what Canadian players would be. So what that allows us to do when you combine that with the compelling fiscal regime in Brazil is we can generate some industry-leading operating netback margins and profitability. So on a per unit of production basis, our operating netbacks totaled nearly US $55 per BOE in the second quarter, and that represented an operating netback profit margin of about 87%. So that's about as good as it gets in our industry.
Corey, you've been active on both sides of the portfolio. Can you update us on the progress at the Murucututu and Capure fields in Brazil, and when investors might see production impacts?
Yeah, Q1 and Q2 have been really exciting quarters for us, but we've had a lot of activity over the last little bit here. So I think there's actually even more to look forward to in the upcoming quarters. So to break that down, on Caburé, which was our original natural gas producing asset in Brazil, we're 56% working interest there. We're right in the middle of a 4-well development drilling program. So 3 of the wells are done. The 4th one will be drilled this quarter, and we'll bring all those wells on production over the coming couple months. On Murucututu, we had a very good success late last year that helped deliver some of that production growth that I talked about. And we just finished drilling a follow-up well called 183D4. This is a 100% working interest project just to the north of Caburé. We just finished a 7-zone completion in that well, and we look to have that on production here later this month. And then, like I said, in Canada, we just finished drilling our most 2 recent wells there. So at the same time, later this month, we'll have the new production from those 2 wells as well. So it's a pretty exciting time to be an Alvopetro shareholder.
And you're sitting on a healthy working capital surplus and strong cash flow, Corey.
Mm.
How are you approaching capital allocation for the rest of 2025, particularly in terms of drilling infrastructure or shareholder returns?
Yeah, so our model's been basically to take half of that cash flow and return it to stakeholders. We recently announced another US 10-cent per share dividend to shareholders. At current share prices, that translates into a 9.4% yield. On the reinvestment side of things, we actually have been probably more active over the last couple of quarters than normal, and that's because we've had simultaneous capital programs going on in Brazil as well as Canada. The Murucututu drilling program will probably have a little bit of a pause there, incorporate the results from that 183D4 well that we just talked about, and then look to restart capital sometime in the new year. So you'll probably see capital expenditures trend down a little bit here as we move towards the end of the year, certainly relative to what you've seen in the first half of the year.
Well, Corey, I hope you'll continue to keep us updated with your progress. Thank you very much for taking the time today.
All right. Thank you for the time.
Corey Ratan, the CEO of Alvopetro Energy.